Good evening, everyone. Welcome back to another episode of the Catalyst Lifestyle Podcast. I am your host, Sunkist, and with me tonight, my partner in crime, Aria F. Wright.
Good evening. Good
Good
evening.
evening.
How are you?
Happy Sunday. Happy Sunday.
Happy Sunday. Did you go to church today?
In my heart and mind, yes, I did.
Mine.
Once my soul is connected to God, that's what's important. I'm not saying that going to church is not it's not a bad thing. Get your butt inside the house, but always stay prayed up though. Always
Yeah,
stay prayed up.
yeah. I mean, the building is just a vessel.
Right.
Let's increase our chances of getting to church by just mentally getting there.
Mm-hmm. So tonight's episode, we're talking about. I mean, this is the time to talk about it, right? This is definitely the time to talk about it. So, tax preparation and home and business. So, tax preparation is what we're talking about tonight with our two guests that we have this evening that we will get to in just a second. But Ari, are you ready for tax season? That's what we want to know. That sounds like a no.
That's such a loaded question. Like 2020 was so scary to me for a lot of reasons. And I think that this episode is important for me because you just never know. Like I don't understand a lot about taxes in the first place, but then when you throw a COVID and, all of the different things, little programs that are offered and, payments deferred and things like that, it just creates a whole different level of confusion. So I'm eager to hear what our guests have to say because they come from two different perspectives, but it's definitely aligned. Like we were talking before, the show, and it's like what they do goes hand in hand. So it's going to help me feel a lot more comfortable about what I have to do next. And in fact, I didn't even realize that I had W-2s or W-9s. 1099s and W-2s mail because I don't check my mail. So I was like, I opened the mailbox and I was like, oh, I forgot about that. Like, you just think stuff is going to go away. It didn't go.
Right. I mean, I'm ready for it. I'm ready for it from a learning perspective as well. I mean, and that's why this episode is key. There's so many reasons that than ever to get started now in your taxes, right? So you have the IRS, they're starting their process for the 2020 returns on February 12th. And then while still like shoveling through last year's files and effort to go through like the stimulus payments, you still have the IRS adjusting individual like income tax brackets and inflation and last year's CARES Act, which, I'm not too aware of like as far as like what it means and like what it's for, but that's something that I like to talk about as well. And then, like you said, like, being concerned about charitable deductions, the IRA, your IRA or your 401k plan, and how that all fits in, right? So, and then don't forget, everyone, the deadline's April 15th.
Yeah, defaulting agreements was another interesting little tidbit that people probably didn't think about for 2020.
Yeah. So it's going to be interesting. So let's start the show. Who's our first guest?
So our first guest hails all the way from Brooklyn, Storm Leroy. He is the founder and sole proprietor of A.S.K, which is Always Seek Knowledge. And in 1999, he realized the benefits of property ownership and decided to expand his real estate holdings and explore out-of-state real estate investments. He provides mentorship, investment courses, advice, consultation, and assistance with acquisitions for those who are looking to invest in the out-of-state real estate market. So definitely excited to have Storm here. He also does he's also doing his own live after this. So we can ask him some more questions.
Let's bring Storm in.
Hey, what's going on, family? I can't call it family. I'm good. How you doing, Aria?
Thank you for joining the show this evening.
Thank you guys for having me, man. Any place I can get the word out and burn some of this battery with talking, I'm here.
All right.
Absolutely.
Well, we got the info we waiting to get from you, so get geared up.
Oh, I'm ready.
All right. And then to compliment Mr. Leroy, we have Mark Mark Spark Welch. Mark received his bachelor's degree in accounting and business management, and he worked for Mount Sinai Hospital as a financial analyst. His experience in the world of entertainment has taken him far and wide, and his vast portfolio not only covers music, but it also includes his role as a content creator and executive producer for film, television, and documentaries. He is clearly and truly a jack of all trades. He is Mark Spark Welch. Welcome today.
Thank you for having me.
Mark, what's happening?
I'm good, brother. Happy Sunday.
Happy
Happy
Sunday.
Sunday. Thank you for joining us.
And I
We
didn't
appreciate both of you.
I didn't go to church either.
Yeah.
But it's in my heart.
Yeah. Listen, Aria put me on the spot, so I'm glad you spoke up.
I thought, you know what it is? I thought it was coming. So I said, let me just put it out there in advance.
Well, I mean, all you really had to do was like roll over and press the button.
Indeed. Right.
Yes,
Right.
yes,
Right.
true.
Guys, let's do better. Let's do better.
That is the new church. Press the button.
See? Let our black women lead. Let our black women lead.
Never impress button. Yep. Come on. That's a good word this morning. All right.
All right, gentlemen. Are we ready? Let's get this started. So there might be some confusion. We're going to talk about taxes and how it relates personally and business wise, and then also from a home ownership standpoint, how it all correlates. So there must be some confusion on how or when to file for taxes, and law changes every year, right? So what should we be filing, and should we even file certain documents within the year for our 2020 tax season? I'm starting heavy. You starting
knock yourself off, Mark. I'll piggyback off of you. You know what I mean? I'll talk all about that real estate tax. You can hit with the big broad spectrum. I'll hopscotch with you.
You know, a lot of people, they delay filing their taxes because they're like dread it. But I think filing taxes should be getting excited about, just because it's a place where if you don't know, you don't know, but there's a place where you can actually benefit from filing your taxes, especially if you are a business owner or if you're just a sole proprietor. A lot of my clients tell me that I'm going to owe anyway, so let me just do it on, April 15th, or let me do an extension because I know I'm going to owe anyway, so I'm not, going to do it. But dealing with the right accountant, if they know their numbers and know a lot of the guidelines and rules and regulations that they can give their clients, there's a benefit to doing their taxes and not letting their clients owe taxes. So there's so many different things. Like a lot of clients come to me and say, Mark, look, I need my taxes done. I know I'm going to owe, but I just need them done. So I'm not the type of accountant that just do their taxes and send them paperwork. I actually walk them through the process and show them where they can be benefiting from. And this way they know, first of all, they'll never forget. Second of all, they know next year what to look for and what to do so that they don't have to have that dread of not filing taxes. And there's so many things that you can do as far as a sole proprietor, having a side business. People come to me and say, I owe taxes, but I'm like, what do you do on the side? I do hair on the side. I braid people. They give you money. Yeah, they give me $20, $30 here. I cook food for these people and I made $1,000. That is a business. Now, you can write off everything under the sun. You can write off that car, transportation money that you paid to get to that appointment, or that transportation money that you spent to drop off that meal, or whatever it is that you got paid for, no matter whether it was a hobby or whatever it was, you can now write that off, and a bunch of other things. So when I do that, they see themselves going from red to black damn near instantly.
Got you.
Now, on my end with it, which is on the real estate side of it with doing your taxes, when you do your taxes, and it's based on if you have a rental and, you're collecting a rent, you write off those things. I try to expand and put things in people's head where you can kind of reach a little further with your taxes. And I recommend things like you becoming the property manager of your property. If you're living at this property, I always recommend people to take your home, put your home in a trust. You know, I did this ebook, Take Your House Out of Your Name, and the whole thing. And that conversation kind of sparked me to get a little bit of notoriety online and other people posting it. But what that entailed was taking your property, placing that property in a trust, which we should lean more towards a trust than a will. A trust is a very important mechanism if you're really thinking about creating that generational wealth. But before I jump all into that conversation, when you take your property, you place it in a trust, you're now taking it out of your name. You're no longer the owner. You're the manager. Right. So who's the owner? The owner is the same people that you would leave that property to if you had a will, be it your spouse, your children, or whoever that may be. But now that you've placed this property into their name, they're the owners, and now you're the manager, what does that do? That releases you. So you now have the capability of saying, well, I'm still taking care of this property. Let me start me a business as a property manager. You're maintaining a property. You can become a property management company. You can now write off certain things. If this unit now has a rental property, you can now write off more expenses as a property management company. You can write these off as an individual, and now your company is writing off the expenses, fixing things, repairs. For those of you that, you know, you might want to do renovations on your house, and you say, you can't take $20,000 to do your kitchen, gain $50,000 of equity, and think you could write the $20,000 off. You can't do that as the owner of your property. But if you had a property management company, the property management company now did the renovations on your property. Now you're allowed to write off some of those deductions more than you can as an individual. The length of where this goes, and it's all legitimate. This is the length that we can go to when we understand how the mechanisms work of using taxes as your friend. I tell people you and taxes just haven't developed that relationship and haven't been properly introduced. But when you are, it's never I pay taxes. For me, I can't wait till tax seasons come so I can start to get paid. You know, so that's just one thing of the real estate and going into using that trust to release yourself from that aspect. I don't want to start going, you know, Mark, I can run my mouth, bro. Come on.
Okay.
I'll touch more into that. I'll let you guys carry on.
No, I love the way I love where this is going. But let's just take a small detour for a second for those that fall into this category, right? So roughly right now, there's 847,000 Americans unemployed. So, Storm, I'll start with you on this. How should those individuals file? For those individuals that are unemployed at the moment, how should they file their taxes? And then also another part to that question is, how should they file their income tax while collecting unemployment?
Oof. Wow, Mark is really going to have to grab a hold of this steering wheel here. You know what, if you're unemployed, there are new rules and things in place that I wouldn't dare due to the administration of what's going on with the last administration and right. the new CARES and those things, where you can easily slip up and think that you're going to do the same thing you did last year. This is where the proper accountant comes into play, because I can sit here and tell you everything what happened last time or last year with the last situation, and it won't be right because this changes so dramatically. Now that people were able to get these PPP, there's now a tax situation in regards to that. So How much did you get? So, those are so tricky, where this is where the right accountant comes into play. And when you do, as Mark mentioned before, they will sit down with you and tell you how to address this, where it's beneficial for you. You should never have an accountant tell you to come in or not even come in. Well, email me your paperwork and I'll do your taxes and send them back. That's a bad start right there. They need to ask you in detail. What did you do? Did you borrow any money? Did you put out any money? Did you take any loans? Did your business take a loss? Did you lose any employees? Did you keep any employees on? Did you get that employee where you can pay them through? Those kind of things are very, very important. So that's tricky. But what I would recommend, anyone who wasn't employed, if you do have an LLC, you should have been taking, or you not should have, you should be taking advantage of having an LLC, regardless if it didn't do anything. If it's in good standing, take advantage of the benefits of having that LLC.
Indeed.
Okay.
Mark? Just to jump on that, the unemployment, well, everyone that was unemployed in 2020 will receive a 1099-G, which is a unemployment form that the government will give out. And I hope that everyone that filed for unemployment did allow them to take out taxes, because if not, you're going to still have to pay those taxes at the end, and you're probably going to owe money. That's not a probably, you will owe money for not allowing them to take out taxes out of your unemployment. But what a lot of people are doing is they're taking advantage of the unemployment benefits and then getting paid. But then you're also getting paid on the PPP if you have a business. So a lot of people, what they're doing, a lot of my clients are, they're collecting the unemployment, they're collecting the PPP in their business, but not knowing that in your business, you still have to in your business, you still have to pay yourself a salary. So if you're paying yourself a salary, you're still going to have to file taxes on that salary that your business is paying you. So you can get caught up, and the IRS would be sending you another letter stating, hey, you have some extra money that's not taxed from your own company. So you have to be careful with that. So the PPP, a lot of people say, I have a business, PPP is available, I'm going to jump on it and take this money. But you have to be careful across the board. You have to know that the business that you're applying for that PPP, that business also still have to pay you as an employee of your business. The unemployment, the 1099-G, when it comes in the mail, it's the most simplest form. This is how much the government gave you for unemployment benefits. And on the right side of that form, it's going to say federal taxes withheld. If it says 0, you're going to be owing some taxes. If it has 10%, they always take away 10% if you allow them to take it in the beginning of the form when you fill out the form. So it'll be missing 10% from the amount they gave you, which is what you write off, and also the state as well. So they have the state on the bottom, how much the state took out, and they have the federal, how much the federal took out. But if not, just look to be owing some money on that unemployment benefits.
So Mark, speaking of the IRS, there are a few times that I actually received a letter from the IRS with an IP number. And that basically is like a security, kind of like a safeguard to your identity and whatever numbers and assets and information that's put in. Now, if you're not receiving that IP number, is that a flag of some sort? Like, are you in arrears, or is that an issue that we should look out for? Because I know some people that don't get it, and I know some people that do.
Right. So the IP number they usually give every year is usually from my clients. They get the IP number from the IRS because they either had fraud in the past, or you ask the IRS, hey, give me this IP because I don't want nobody else filing taxes on my behalf. It's sad to say, but a lot of the male clients, not even male and female clients that I have, they experience where they don't have, they divorced, or they split apart, or they didn't have a working relationship with their partner, like a husband and wife. They split apart, and now the wife quickly files taxes with the kids. And the husband does the same thing. But whoever does the taxes first, the person coming after loses out. So now,
so rush to the finish line.
You have to rush to the finish line. So also, what you want to do is, that's why a lot of people get the IP number, because they don't want no one utilizing the information. And they don't want no one using social security number, the kid's social security number, so they put it across the board. So if that, just say the wife or mother or whomever it is files taxes for herself and the kids, the IRS will see that that lady does not have an IP number for these kids or whoever she's claiming. So the IRS will send her a letter saying, hey, we need you to send us the IP number. If she can't provide it, then that person who put in for the IP number, he can now do the taxes in those kids' name.
Got it.
So the IP number is a security number for yourself, for the taxpayer.
Okay.
Right. Okay.
So that's so helpful, and it just made me think about something that happened to me. I think my 2017 taxes, and I believe that was the year that we had to first start showing what our tax returns were for my son's college. So I think he went in 2018, as I can recall. I can't remember. I don't even know what day of the week it is. but I think no, that's not true. He started in 2017, so I had to show 2016, 2017, so on and so forth. So apparently when my accountant did the taxes, just as you were saying, my ex-husband and I used to alternate, with claiming him. And we mixed it up one year, so we had to file an addendum. IRS thought it was fraud. It was a mess. It took me 3 years to clear it up. I literally, 2017, I literally just got the refund check earlier this January. It was insane. Yeah.
Wow.
So to your point, like, don't get caught out there.
Yeah, it's important. That IP number is important. And it helps you also in any fraud case, because fraud does exist. I mean, people that have not experienced it yet, great, but it does exist. People are searching for other people's information so they can tap into it, hoping that nothing will ever come back to them.
Right.
But when you have that number with the IRS in their system, can nobody touch your information.
Okay. Good to know. Okay. So tax implications from working from home. So can we claim additional expenses associated with the likes of heat, utilities, office supplies,
Zoom,
get ready
for a storm,
repair supplies,
Zoom subscriptions,
Netflix.
And literally convert that room into an office, right? So this is the reality. That old style of living, or this is the new way. This right now is the reality. And Ari and I always talk about that. Like, this is it.
And I need to know specifically about.
Oh, she pointed a finger.
Comes out serious
stuff, because my son is not supposed to be here. He's supposed to be on campus. And I had to make a whole big adjustment, building shelves and building a desk for him. And
you're writing all that stuff off. You should be writing all that off. Like, we know if one of the best things, even if you're not making any money, if you have an LLC, and I preach this to the nth degree, claim having a home office, which is fully legitimate. Get you a desk, get you a laptop. You can't use the kitchen table. You can't use anything that doubles as an office and also a kitchen table. Get your little corner, put your desk in there. When you have a home office, you're able to write off around 20% of your mortgage, 20% of your rent, light, gas, also, like Mark mentioned, your vehicle. Like, if you were to add up your mortgage for the year or your rent for the year and say 20% of this, I can write off. That's ridiculous. That's amazing. Think about the laptops, the computers, the extra shelves, the extra space, anything at home. And you don't have to be making a profit. Your business could be consistently losing money, but you're running a business. You're trying to get your business to make money. Write these things off. I also mentioned to a lot of people who are driving, the biggest thing with doing your mileage was it was hard to keep track of your mileage. But there's an app called Avalanche. Avalanche keeps track of your mileage with everything you're doing that consists of work. Having a home office is so beneficial to you. So for me, that's one of the key things I really try to place in the mind of people. Cell phone, you can write off a portion of your cell phone. You're using your cell phone. Your cable, your internet, you can write a portion of that off. You can't have an office. You can't have internet. You need internet to have an office. So guess what? You're writing some of that off. You know what I mean? So it's just the fear factor of us thinking, well, is it legitimate? Yeah, they put a rule in place a long time ago with home offices. So there's no maybe, if, and, buts about it. You have a desk, you're conducting office, a certain amount of square footage is considered office space. You guys really, really speak to your accountant about that, especially working from home. We're doing these Zooms, we're getting these mics, we're upgrading our phones, we're buying these lights, we're getting these nice desks, these expensive lights. And I'm telling you, when I first got involved with this, I said, what, for a light? Man, listen, I got back to my days. I was a contractor. Once my boy came by, he told me what kind of bulbs to get. So I'm not buying $200-$300 lights, man. Look, you know what I mean? I was like, this stuff it's costly, but this is what we can do to learn to write. And these write-offs are really big write-offs. Like I said, you think about your internet, think about your cell phone, think about that. Those numbers are big, big returns.
Car repairs.
Yes, car repairs also, definitely. I should remember that one. I had an experience with that.
Car repairs are so important. Mileage.
So Storm, let me ask you a question to piggyback on that. If you create an LLC and you haven't started making money yet, can you still write those items off as expenses?
Yes, 150,000%. Think about any business that starts. You don't come out the gate making money. Like, to start a business, what's the first thing you're doing? You're spending money. You're losing money. The very first time you say, I'm going to start a business, I got to buy this, I got to buy that, I got to do this, I got to do advertisement. Everything that you're doing with advertisement, if it's Google Ad Share, or even if it's flyers, or even if it's I won't go that far back. I was getting ready to go old school. Like, you get ready to say, but anything you're doing as far as marketing, you're on these calls. The electric, which is so crucial. You're writing off this electric, you're up. Yes, you're writing this, anything you're buying, uniforms, shirts, marketing, like my gear. I write all this stuff off. This is a must, so I encourage people at all times. If you have an idea, like Mark mentioned, you're doing hair, you're doing anything of the such, even if you're not conducting that business from your home, it's an outside business. But when you come home, you're doing business. That's a home office. You need to be taking advantage of to and fro. I'm driving from here to my business, driving back home. I'm driving to Home Depot to go get me some tools to get supplies. You write that off. You buy those tools, you write those tools off. Creating, and back on my side of the world with the real estate, creating your property management company. It's so crucial to being able to get those deductions as a homeowner that a lot of times you're not able to write off. That is a big thing. We look at buying a home as an undertaking when you shouldn't. You want to have live that dream. You have your home, your family's here, and this and that, but you get those mortgage payments. A lot of people don't have rentals to help with the mortgage payment. So how do you now add on to help with that mortgage payment? That's the home office. That's the property management side. That's the side of being right off that oil, that heating, all that costs. It's like having that invisible partner in the house that's not there, taking on the burden for you. You know what I mean? Taxes is now that invisible partner in the house where you're going, oh man, I wish somebody was here to help me. Yeah, they're right there. It's called tax. They're here to help you with all that extra. If you're able to write off that much and give it the burden off to somebody else, that's a no-brainer right there.
Okay. So Aria, you good?
What are some red flags though? Because you're saying to take all this stuff, claim all these things, but what are some of the things that are like triggers to really get you noticed in a bad way?
Yeah.
Groceries. Groceries. Things of that nature, party type things, unless you're a party planner and you're buying samples. A lot of things where if you're doing sample sell items where you need to buy one or two things as a sample sell, that you can do. But if you're buying one item as a sample, you can't say, well, I bought one, now I'm gonna buy 200 items. Now you need to show that you use those 200 items for a party planning event. So now, for example, if you had a property management company and you said, well, my property management company, we had a great year, we want to do a party. Guess what? Now those groceries, now those items come into play. But you have to be able to think out the box. When you're involved with businesses such as taxes or property management or whatever the case may be. You have to be creative, think creatively, whether that be finances or how can I do this or do that. These things will help you grow, because once you get yourself out of that comfort zone, out of your box and out of the fear factor, because we fear taxes more than anything. And that's like, you know, it's the thing of not knowing. But here's the thing, you can ask, you can find out, you can ask someone. I tell everyone, Google's your friend. Google is your friend, man. Go on there, ask some questions, or if you feel you just don't know because there's too many variables in play, then you have someone online who, if you're watching me, you're watching Mark, you're watching you guys, reach out to us. We're here definitely all day to give you some insight on those things. But the red flags are your shoes, Aria. We know we can't do that. a couple of outfits for the show. You can get away with it because you need it. You know what I mean? But
See, I'm
definitely
a sneakerhead, so I gotta write those off if I'm reselling shoes.
Oh,
Like,
that's a business. That's another business there. Come on,
right?
I got a partner. I had to talk to him about that. I'm like, dude, you doing what? That's a business. You buy sneakers and you're reselling them.
Can I ask one thing, because I struggled with this one? You know, of course, we all have a lot of like black tie events and things that we need to go for work. Like, can we write some of that stuff off, like buying a ball gown, buying Louboutin?
Was it for work?
Oh man.
Was it for work?
Yeah.
It's a work event.
It's a well.
Look at Mark's face.
Mark, I'm trying to work with him, Mark.
Promotional event. It's a promotional event. Let me do one better for you. Where did you, in 2019, you weren't traveling in 2020, but 2019 you were traveling, correct? Did you go in 2019? Where did you go?
I'll think of the last place, Rose and Blanc in the Hamptons.
Further than that, did you take a plane anywhere?
Plenty of planes, yeah.
Essence. Essence.
Essence Music Festival.
Okay. Did you write that trip off?
Well, Essence pays for it, but there were certain things that I guess while I'm there, you know, you probably do a little bit more than you should, like with allowance or whatever. So, you know, maybe some extra drinks. I don't know.
Do those things. She didn't take advantage, Mark. I'm gonna tell you now. You know what I mean? She didn't take advantage. Like here's a look into it from the real estate side of it. And I tell people it's called a book-in vacation. If I know I want to go to Florida from Friday to Sunday, Thursday I'm gonna book me a real estate meeting with a broker. I'm gonna go look at some properties on Thursday, and I'm gonna also see some properties on Monday to sit with some realtors on Monday. So what I'm gonna do from between Thursday and Monday, I'm vacationing.
Yeah.
I'm vacationing, and I'm writing that off as a business trip. Either 50% or somewhere to 80% of that gets written off because I had to stay in Florida from Thursday to Monday.
Right.
This is things that we need to learn. Book in vacations. Yeah. Anywhere we're going, set up a meeting in line of what you're doing. If you know now that you need to go somewhere 8 months from now, whatever your profession is, meet up with some people there, set up that meeting. Have this thing in place. Use your business credit cards. Do not use your personal credit cards.
Never.
Do not use your personal credit cards.
Say it again.
You know what I mean, Mark? I left the space there for my man to get in there. Do not use your personal credit card. People go away and I'm on this trip and it's business, but you like, well, this part of the trip isn't business, so I'm gonna use my personal card to pay for these drinks. I'm gonna use my personal cards to pay. What are we doing here? You're defeating the purpose.
Jump on that. Like, also what I do is I being that I have the entertainment company, one thing I did is I put an entertainment company in my kid's name. But aside from that, they're also employees of my company. My kids are my employees. So when I take them to that book-in trip, my kids are with me because they are now employees of my company. Right. So I pay them whatever I need to pay them. I don't care if it's $5 a week, $20 a week, whatever it is, they get paid.
Right. So they're extending the legacy.
Yes, that's great. I did a whole little piece on that. Give your kids a salary, not an allowance.
Yes, indeed.
When you pay your kids a salary, now the benefits of them paying a salary. What also I throw in there is that you should have your kids open up an IRA under their name and they're paying that off with the portion of salary you're paying them. And once they do that for accumulation of 4 to 5 years, I give an example of about $40 a month for 5 years. When they're ready to retire, that's over $200,000. When they're ready to retire, that cannot be taxed because they opened it up as a minor. They opened up the IRA as a minor.
I hope everyone that is in the sound of my voice and it is the sound of everyone's voice on this panel this evening is taking notes. These are gems. These are nuggets. These are diamonds. This is something that is being practiced by every other culture, and our culture has to take it upon themselves to make themselves accountable for their long-term wealth and to extend their legacy. I love what's being talked about here. So Aria, did you get all that?
Yeah.
The shoes, the dress, not the drinks, just the shoes and the dress.
Listen, I mean, you know, when I worked in liquor business, of course, there were a lot of things that kind of blurred the lines, but I felt strongly about the gowns and the things. It's like, but I got vetoed on it. It's just like, that shouldn't be vetoed. Like
those things should be implemented
for purposes, and I'm going to galas for that I've been invited to by clients and things like that. So that kind of stuff, it should be, I think.
Right.
One of the most
so Mark,
keep in mind that your life is a business. You are a business. You're a walking business. As soon as you get that knowledge that you are a business, don't ever forget it and operate as a business. Everything you do is a business. This way you'll know, okay, I can write that off. I can be smart at doing this and doing that. But keep in mind that you are a business. This way, if you are a business, you can write everything off. And not necessarily, it's just say, okay, I want to do a business. I don't have what is a legal Zoom now? I think it's like $400 or $500. I don't have that money yet to do this business. You can operate as a sole proprietor for the time being. You can operate as a sole proprietor and take those same benefits as a business. And you can still write off a lot of those things, but you can't do the PPP because they're looking for that what is that? The tax ID number. They're looking for that. But yeah, definitely you can still get those same benefits and write-offs operating as a sole proprietor. And you can just you attach that to your tax. And that's one of the ways I get a lot of people I do taxes for out of the red owing taxes. I start talking, and then, like I mentioned before, what do you do on the side? What do you get money from? Your side money, whatever. And they start talking. When they start talking, I'm like, and I show them the screen, and that's why it's important to let them know. Look, as a sole proprietor, you can now write this off. You can write that off. Oh my God, your numbers start changing. Now you owing 8,000. Now you're down to 4. Keep on going, and just make sure that's in the guidelines. Because if IRS decides to say, hey, we want you to prove that you did take that trip and buy that gown, you have a receipt. You have a legitimate receipt, and that's all they ask for. They're not asking for your life. They don't take that other thing. Oh, they come knocking on your door. They come looking for you. Yeah, they don't do none of that. They just, if they're asking for some extra receipts and stuff, that's all they ask for. Literally, that's all they want. Prove to us that you.
So Mark, if you have a client that comes to you and they're in debt, should they even file for bankruptcy? Like, and as far as filing their taxes, and like, how does that work?
I would never advise bankruptcy. I see bankruptcy as a final resort. Storm, you want to jump in on that one?
No, if you're looking to conduct business, get some business loans, acquire a couple of things, you'll be better off making arrangements. If we look at the history of people that have filed for bankruptcy, they're really not extremely poor people. They're wealthy people who are using bankruptcy as a tool to further their wealth. So us having being in debt, if you're in debt $5 million or you owe $5 million taxes, that means you made somewhere around $10-20 million. So we should, as an individual, I wouldn't never recommend jumping out that window. unless you have an ultimate plan. There's always a way out of the debt that we incur on our level. It really is. You just have to adjust your business. But if you close all options to business lines of credit, fixing your credit, because once you file for bankruptcy, Mark, I think it may be 4 years or something like that. There's a long, lengthy time in between you being able to.
It's almost, it's longer than that.
Yeah, but I know there's a lengthy time, and you have to, is it worth it? You have to take on part, unless you're going to take your knowledge and now give your knowledge to a team of people who working with you, where now they can use their credit, their money, their things, and you have the knowledge, and you're going to shut your doors, because there are people who shut down their doors, and we all know the move, file for bankruptcy, but they open up another company, have 2 other people as the face, and their brain is running this business. I really like to mention 2 of them that we know very well, and they're still running. And they're running that business with their brain, and they're making money. But they say, you know what? I don't want to pay that $2-3 million there. But just have a plan. But like Mark said, I would look at it as a last resort.
Okay.
A lot of companies that go into bankruptcy, not so much individual, but companies. There's another way that you can get another life in business, and that's open up another business. ID number is another life of a business. So if you have horrible personal credit, you can live again under a tax ID number and build up that tax ID number with business. And now your personal credit is sorry to word, I'm gonna say the shits, but you can now gain another life with the tax ID number, build that tax ID number up. Right. And now that tax ID number is attached to you. With a lot of these big corporation businesses that go into for a bankruptcy, they don't mind sometimes getting rid of that company, because the next thing they do, if they file bankruptcy on that company and that company goes, they get a new life. They open up another company, build that company up, and now they live again with another company. But you don't want to get into that cycle. This is what a lot of the rich guys do. They don't, when their company is not prospering, or if they can't move to the next level, they let that company, they go into bankruptcy, so they don't have to pay all of the debt that company has. They get another tax ID number and they live again, and they build that up, and they keep doing that for as long as they need to. But with personal taxes, that would be a last resort for me. I would do my best. There's so many companies that's fighting to help people not get into bankruptcy that's out right now. So yeah, that's what
All right. Well, I actually have a few more questions, and we got about 20 minutes left. But Aria, I think we have Valerie Lewis.
Yeah. She has a question. She says, excuse me, if your company gives you a stipend for internet and electricity for working from home, 100% due to COVID, and you write off any other monthly expenses.
Absolutely. They give you a stipend for, what was that again?
So they give you a stipend 100% for internet and electricity for working from home. So I guess there's also, and I'm not sure if this is excluding, but like cable, and then there's there's other utilities. Clearly.
Well, but does she have a home? But does she have a home office? You know what I mean? Like, how is she? If she has a home office also, that she's already claiming, then yes, she can write it off. But you need to have somewhere to write it off too. You can't write off on your personal. If she's thinking, can she write off on a personal? No, you can't write off on your personal, but you have to have somewhere so you can write off on a business. They're giving you money to work from home, then you're working from home and they're paying you for using your electricity. It would be great if you had a home office on top of them giving you money and you're able to write that off. Man, that's win-win all day.
A couple of friends of mine, they actually asked their company for a letter to allow them to work from home and claim their home as a home office. And you can get that from your company, but you have to ask, the supervisor, or if the supervisor doesn't know, go ask the supervisor to go beyond that and ask them for that letter qualifying you as a home office. It's definitely been done several times by friends of mine.
Okay.
So
Very interesting. We have two. I have two questions here. This is probably going to be more for, well, probably both of you actually. So, where are and what are tax shelters? And then the second question is, what is the best option? Filing online using platforms such as TurboTax, or getting a tax preparer, or should you just go through an H&R Block or a Jackson Hewitt?
So, Storm, you take the first one. I got the second one.
Which the first one was a tax shelter.
Tax shelters,
that was
yes.
it?
Mm-hmm.
Yeah. Real estate. That's my. You know what I mean? Like, you know me. I'm a real estate. I purchase a lot of real estate. I do out-of-state real estate investing, and the shelter for me is I can place. Being that I have properties in other states all over, I can now hide or put things into these. I wouldn't use the word hide. I would now be able to use all of these different properties, these different places, to shelter funds for different reasons and different things, if that's the direction that they're considering. Because when you use the word, I want to shelter, okay, you have $200,000-$300,000. You want to know, where can I put this as a safekeeping to either avoid paying taxes or pay the least minimum amount of taxes on that money? So, being that I have different, I have six different LLCs. Most have to do with real estate, and some have to do with consultation, and some have to do with other things that I do, and writing and speaking and stuff like that. But the best one, the tax shelter for me, has always been real estate, because think about it, I'm able to write off so many things if I need to go to these places, if I need to stay at these hotels, renting these cars. So yeah, I'm definitely the real estate guy with using those
Gotcha.
things as shelters for my funds.
Okay. Mark, on the what's the best option as far as filing your taxes?
Get a good accountant.
Straight.
Bottom line, H&R Block, they have a job to do. Their job is to do taxes and get you out, get another person coming in, get them out. So it's a process for them. It's like a factory process. So they're not concerned with getting the most benefits of taxes for you. Right. You know, I call myself H&R Mark sometimes. You know, a lot of people, tax clients of mine, call me H&R Mark. But I'm not a factory accountant. I sit with my clients, and make sure they understand what they're getting into. And if it takes 30 minutes, an hour, whatever it is, they walk away with the understanding of how their taxes operate. You know, so yeah, H&R Block. Okay. If you want to go, you can, but they don't have your best interests.
Get what you pay for.
Right.
Exactly. TurboTax is a good program, but you still have to know how to navigate with TurboTax. You still have to know what to write off. TurboTax is not going to tell you, hey, go over here and write off all of this stuff for your business. Hey, go over here, you know, your itemized deductions. You know, it's not going to tell you exactly what to write off. So you have to have someone either tell you or guide you through that process of TurboTax. So that's the only benefits I have. Well, go ahead.
Yeah.
Gotcha. Go ahead, Aria.
So I have two questions. One from one of our viewers, and then I have a second one. So Jasmine asked, can you recommend a good CPA in New York that specializes in real estate?
Really, I tend to avoid doing the recommendations on things like that, because it depends on if you have one property, you have 10 property, if all of your property is in New York, if you have properties throughout the United States, like it's different based on what you have and what your goal, you know. So there's not really one a cookie cutter one that fits your needs. You know, real estate. If you're dealing in, you just have one property, and you can have an accountant that work out your real estate. But if you have 4 or 5, then we can have a conversation. If they're in New York, we can have a conversation. Just give me a little more on what is the scope of your real estate portfolio. Then I can go, okay, cool. Now I know someone that I can recommend that can help you with the different transactions or things that you're doing. I just need a little bit more, and you can reach me on Instagram, Storm Management Investment. I talk to people all day, especially after this. I definitely want to answer that question properly.
Okay.
Okay.
Ari, you had another question?
Yeah, my second one. So, surprise, surprise, my son gets a 1099 in the mail, and it's his first time. So, is it best? I mean, my mother does taxes, so I think for his first time, it would probably be, him in a comfort zone, allowing her to do his taxes. But when should we move around? When should, the person who's just filing for the first time, like, what should they be looking out for? Should they be going to the H&R blocks, or, finding someone, a friend of the family or a family member to do their taxes? What are the pros and the cons?
So far, Mark, I didn't catch none of that. Yeah, my sounds went off.
So if I'm correct, it's a question about kids in college and filing taxes for them as well.
Yeah, like if it's your first time, filing, like, what's the safest route? Should you go to someone that you trust in your family, or should you go to, one of the big guys? You know what I mean? Like, clearly you guys have done a lot of consulting with family members because they felt comfortable with you, or maybe not,
right.
But you just knew that you did, you worked in a specific area. So,
right. So the thing with, you should always go to someone you trust. And I would ask, it's just like buying a house. You don't go to the first house and say, okay, that's it. You shop until you're comfortable with, this is it. I think the same process should go into finding the right person to deal with as far as business, your accounting, because it's super important, because you can be leaving thousands of dollars on the table. One of the things is when kids in college, and they're working part-time, you want to make sure that that kid does not file their own taxes because they made $5,000 or they made $3,000 or they made this much amount of money. You want to make sure that you are still taking care of that child. Even though they're in college, you still file them on your taxes, because if you do not, then all that college money that you're paying for them, you can't even write that off. So you want to make sure you are claiming the child in college, because if not, then, all of the stuff. Now, if they file their own taxes, then they're not eligible to receive all those benefits for tax write-offs. I don't know. Did I answer that question?
Yeah, that was super helpful. I didn't even think about that. I mean, I'm sure that once we get to it, because it just, like you said, it makes me nervous. Like when I think about it, because I just don't want to do the wrong thing, And I think,
for instance, I'll give you a for instance. My daughter's in college, and she worked part-time, so she got $4,000. She still can't live off her own. Like, we're still paying for that apartment she lives in. We're still paying. We're still giving her money. We're still doing whatever we do as far as taking care of her. So we still we still claim her on taxes, but the money not money, but all of the money that she paid to the college, or the money we paid rather to the college, we can write off that money as tuition. We write that off. So if we let her claim that $4,000 or $5,000, then we have no right to that deduction, that student tuition deduction. So it's important that that little money that they receive, don't let them, I'm going to get my money because I'm going to get my $100 from my money. No, sweetheart, listen. We're still going to claim you. And
trust the process.
Yeah, there you go. So, and also what I do is I'll do the taxes without her money or her benefits, and then I'll do it with the benefits. And then whatever the difference is, I'll say, here you go. But it's important that you take that student tuition deduction so you can get that benefit.
Okay.
Super helpful. And then Jasmine said that she's taking your course now, Storm.
Oh, yeah, yeah. Congratulations. Come on now. I'm trying to educate the world on investing out of state. And make sure, Jasmine, you submit all your homework, because I check everybody homework. I'm fully on everybody with this course. Kat, get on it. Invest out of state. I'm very hands-on. If the teacher doesn't come with the course, then consider not purchasing the course. He should come as a part of that course you're paying money for. So definitely, greatly appreciated, Jasmine. I'm here for you.
Excellent. Excellent. All right. We're getting close to the end of tonight's program. So here's again, another loaded question. Amnesty programs with the state rental. So they vary in the tax types, the conditions, and the benefits provided. So what's the approach there? And Storm, I think this is more in your lane. You can take the helm on this question. What's the approach for amnesty programs and with relation to real estate rentals?
Well, I have a business model with my rentals, like instant cash flow. You know, I deal with 90% of my rentals, over 20 some odd of them, are programmed. They're government based, either Section 8, Social Security, something like that. So those for me are my sweet spots where I deal with the government giving me either 180% of the rent, because I don't like to rely on tenants having to pay me the money. You know, we think of the Section 8 in New York as being disaster, but we don't consider the Midwest. We don't consider the South. Like, these people have manicure loans and bringing in money. And I don't, I teach to not be involved when you're investing in real estate for no more than 5 years. You have to look at real estate as an investment. So I tend to not become invested in the tenant being solely responsible, which benefited me a great deal now, because out of all many investors I know are not getting rent due to COVID, and now the moratorium, you can't evict them, and they're going nuts. But I'm continuously still cash flowing a great deal with my rentals and with my business model, and that's what I want to teach people, to invest in instant cash flow business model deals, and don't let your market too expensive or the Section 8 horror stories scare you from becoming profitable. That's the key thing. I want you to be able to take your 10,000, 15,000, become an investor, start, grow, and continuously make money, and not feel that you're being pushed out of that real estate world because you don't make enough money, when actually you probably do. I know that didn't answer your question directly, but that it's my market there. My market doesn't impact my market. Maybe that should have been the answer.
So one last question, and we'll wrap it up here. So Mark, I'm just going to go back into what we were discussing before, as far as purchasing, like, you know, a desk and computer and writing that off. So how about for those that work at a company and their office is located, for instance, in New York? However, they pick up a client, and the client communication and networking and et cetera are in LA. So now working from home, you may be transferred to a different payroll. How do you implicate, or how do you apply that, pardon me, on your taxes if you're in that situation, which I think is called like a distributed model?
Okay, so just so I'm getting the question correct. So if you just say I work in New York and I have a client in LA, or if I go to LA, which one is that? Yeah.
You have a client in LA. So now you're not even communicating with New York clients or your New York office. Maybe your team is in LA, but you're working from home in New York, right? So originally your office was in New York. However, now it's changed where essentially you're stationed in LA or even abroad, right? Internationally, or so on. So how do you file your taxes there? Because I'm sure that the payroll would change indistinctively upon you working abroad, but working literally from home.
Well, the paycheck comes from one place, one company. And if I work in New York, but now I have clients in LA, but I still work for I work for a particular company, just say NBC. And NBC has me working from home in New York City, but NBC now is giving me clients to work with in LA as well. the check that comes to me is still coming from one source, one place, which is NBC's payroll department, which can be in Dallas, Texas. But everything still comes from where your home is. Like whatever address you put on that paper is where your tax rate is coming from. So if I'm working in New York and my address is 100 Central Park West, that's where they're going to tax you under New York's guidelines, rules, and regulations. Even though you have clients in LA and anywhere else, it's still coming from NBC, their hub, coming directly to wherever you live, and the address that you have on your W-4 when you first get your job. Okay. Yeah.
Excellent. Gentlemen, this has been awesome. Again, gems, diamonds, nuggets, however you want to describe it. I hope everyone has taken notes. I hope everyone's been tuned in, locked in, tell a friend. Everyone, if you're looking for Mark Spark Welch, please go to his Instagram at mark.spark.welch. And then also, if you're looking for Storm as well, go to at storm_management_investment. Definitely hit them up if you have any questions. This has been very informative. I thank you both for joining us this evening. Aria, any last words?
Yes. Please send me messages offline about how I can get my shoes covered. Thanks.
Everyone, definitely hit the like button, subscribe to Catalyst Lifestyle. This is very informative. This is what we do. This is what we're bringing to you for 2021. Information to help lift us and move us forward. Please do not stay in the old mind state of what you did in the past. This is a new beginning. You can also find us at Catalyst Conversation. That's with the K on Facebook. That would be very helpful. Again, tell a friend, see us on Instagram as well, Catalyst Lifestyle. Aria, thank you once again. Mark, Storm, we appreciate you. And as we say every time at the end of the show, all we got is us. Thank you for tuning in. We will be back. Look at old episodes. Very informative as well. They still relate to the present time. Don't forget. Thank you for
Come to my
support.
Instagram. Come to my Instagram.
Go to Storm's Instagram. He's going on right now. We're signing out. Thank you so much, everyone. Have a great evening. Have a great week. God bless.
Thanks, guys.
Thank you.
Enjoy the rest of your Sunday. Bye.
All right. All right.